We are back with Ron Neuner, founder of Crypto Banter, and we are focusing now on Ethereum, which has the second largest market cap, and a very significant development happening, scheduled for June, and that is the launch of ETH 2.0, which is the merge of the blockchain's proof of work and proof of stake chains. So Ron, explain why this is such a big deal.
This is, for me, the biggest news in crypto today. It is the biggest news in crypto today. So let's quickly talk about where we've come from. Bitcoin and Ethereum are both mined using proof of work. Proof of work is a very high electricity consumption, very high equipment consumption way of mining cryptocurrencies or approving transactions. And it is one of the big criticisms that Bitcoin's faced. So we know that one of the big criticisms that Bitcoin faces, one of the attacks that it keeps facing, and it even faced it as recently as a week or two ago in the European Union, when they wanted to ban proof of work mining because they just don't believe that it's worth it or friendly or ESG friendly or green. If you think about Elon Musk, who made the announcement that Tesla was going to accept Bitcoin. And then speculation is that the board of directors looked at this and said, hold on a second, how can you be the world's greenest company promoting green energy and then be buying and putting this evil proof of work mined coin on your balance sheet? So that is the pushback around proof of work. Proof of work is also not very scalable. And one of the big criticisms that both Bitcoin and Ethereum have been facing, and specifically Ethereum, because remember, Bitcoin is being adopted as a store of value. Ethereum is being adopted for many things. Ethereum is being adopted for decentralized finance. Ethereum is being adopted for dApps or decentralized applications. Ethereum is being adopted for NFTs, which have taken the world by storm. And poor Ethereum, using its proof of work mining, cannot keep up with the transactions that are required. And so what they're doing is they're moving Ethereum from proof of work to a much more energy efficient proof of stake. It's much more energy efficient and it's much faster. The only issue is that somehow you have to combine the chains, the old proof of work chain and the new, what they call a proof of stake chain, which is a very energy efficient way of validating transactions. And that has been one of the biggest risks to Ethereum. Can they, while this airplane is in flight, can they actually merge? It's like changing the engine of an airplane, but while the airplane is in flight. And so now they've tested this on a testnet, or they are testing this on a testnet, and it seems like it's successful. And they've penciled a date later on this year in June, where the proof of work to proof of stake thing happens. Okay, so what happens when the proof of work to proof of stake thing happens? The first thing is that Ethereum moves from proof of work to proof of stake. It moves away from this evil mining that eats up so much energy, and it becomes ESG friendly and it becomes efficient. That's one of the things that happens. The second thing that happens, which is very, very interesting, is right now Ethereum has a uncapped supply. Bitcoin has a capped supply of 21 million, but Ethereum has an uncapped supply, which means that theoretically you could keep printing ETH forever and Ethereum is not scarce. But Ethereum also has another mechanism, which is called a burning mechanism. With every transaction that is concluded, we burn a certain number of Ethereum. We destroy them, they're burnt, they're gone forever. And as soon as the proof of stake chain kicks in, because we don't have to reward the miners so richly because they're not using so much electricity anymore and they're not using fancy equipment anymore, we don't have to reward them anymore. And so the Ethereum emissions, the amount of Ethereum that are being created every day, are going to be reduced by 90%, 90%. Today, we are printing about 12,500 new Ethereum every day. When the merge happens, we're going to be printing about 1,250. So we are literally reducing the number of Ethereum minted by 90%. At the same time, we continue to burn the same amount of ETH, which means that while Bitcoin is inflationary until it gets to 21 million, Ethereum becomes deflationary. So now you've got an energy efficient, deflationary asset. Get into the mind of a fund manager, of a big pension fund manager. You can invest in Bitcoin, which is moderately inflationary and eats up the atmosphere and is non-ESG friendly. Or you can invest in Ethereum, which is ESG friendly and deflationary. Now, lastly, the returns today on staking Ethereum are 3.9%, which is, it's a great return, but 3.9%. When the merge happens, the returns on Ethereum are going to be between 10 and 15% per year. Now put yourself in the mind of an institutional investor. You've got two assets and I want to show you my screen again. You got two assets. You got Bitcoin, which has a market capitalization of $809 billion, Ethereum that has a market capitalization of $361 billion, and every other cryptocurrency that has a market capitalization of under $100 billion. So arguably, there are two tokens or two cryptocurrencies that a big institutional investor can invest in, Bitcoin and ETH. You buy Bitcoin, you're buying a non-ESG friendly proof of work currency, which doesn't give you a return and is moderately inflationary. You buy ETH, you're buying an ESG friendly, very good for the environment, very efficient, deflationary currency with a 10 to 15% staking return. I think that is the biggest news that in the crypto market today that no one's talking about.
A lot to break down there. I do want to slightly challenge the ESG aspect that you're touching on, at least with regards to Bitcoin, because many of the Bitcoin maximalists will say, well, yes, that was the case, but now Bitcoin mining is done using green energy sources, and that in fact, Bitcoin mining is facilitating the creation of geothermal energy, volcanic energy, windmill energy, that through Bitcoin, other clean energy infrastructures are being built and facilitated. It's still mining, but that it's not as ESG unfriendly. I get that Ethereum is definitely more friendly, but I think the Bitcoin maximalists would say that there has been a shift. And I get that that proof of stake is definitely more friendly than proof of work.
Okay, just think Senator Warren. Just think Senator Warren.
Rather not.
Just think about that. The reality is not important. The perception is the reality in these people's minds. And you have, the way you should view it is that on every investment committee, you have an Elizabeth Warren. And if that person has the ammunition, they will use the ammunition without doing the research. So a lot of the whole Bitcoin proof of work pushback is not substantiated. The statistics show you something completely different. But regardless, a lot of the times, the statistics don't really matter, and it's the perception. We've completely removed that with Ethereum because proof of stake is completely efficient. It is completely electricity efficient. It is negligible in terms of the mining power that you use and the effects that it has on the environment. It's very negligible. It's probably as negligible as what Visa and MasterCard do. So that complete thing is completely removed. Now, look, I agree with you that a lot since China banned crypto mining, and all the machines had to move out. They moved to places that energy was renewable energy and stuff like that. But it's still not as efficient as Ethereum. It's a completely different thing. And so all I'm saying is there are a lot of boards out there. I mean, let's be frank. Tesla has not yet started re-accepting Bitcoin. And Tesla is the poster child. It was the first big company that came out and said, we're starting to accept payments. And Tesla has not yet switched on the Bitcoin payments. Now, Elon Musk hinted that when he believes that there is enough data and statistics, he'll switch it on again. And it hasn't happened yet. Now, as the Bitcoin community and the crypto community, we know that it's garbage. We also know what we're getting for the energy that's burnt because we know the stats. I don't know the stats in front of me, but we do know the stats. And we know that to have that kind of network with that kind of efficiency, with that kind of security, and to pay the price of electricity consumption or energy consumption, and it's not as bad as they make it sound, is very much worth it. And so, again, it is a perception thing much more than it is a reality thing. And you're removing that barrier completely with Ethereum. But then you got two extra things. ETH is deflationary, and ETH gives the fund manager 10 to 15% a year.
So let's break that down. Yeah, let's certainly break that down, especially the deflationary element, given that you can create unlimited Ethereum. Bitcoin has a limited supply. So explain in detail how the deflationary element works when you've got this Ethereum burning aspect.
Okay, so I'm going to show you an example because I think that's the best way to do it. If you look at my screen now, this is a site called Watch the Burn. What Watch the Burn allows you to do is Watch the Burn allows you to see the number of Ethereum that are created. You see the thing that says rewards is the number of Ethereum that are created. Ethereum is currently creating since the site was created, or in fact, let's do today. So today, 13,000 Ethereum were created and 3,634 have been burnt, which means that today Ethereum has been inflationary, right? Because there have been 13,000 created and only 3,635 burnt. But remember, when the merge happens, this number, the rewards, is getting slashed by 90%. So it will become 1,347. And we will be burning 3,635, which means from now until the end of time, we will be burning more Ethereum than we are creating. So over time, the supply theoretically tends to zero. It will never get to zero. It'll take thousands and thousands of years, but it's actually becoming more and more and more and more and more scarce. Where in the world do you have the opportunity to invest in a scarce asset and, by the way, earn 10 to 15% return? I've never heard of it.
Well, let's talk about that 10 to 15% return. How exactly does an Ethereum user or holder get that? And to what degree do they need to be active? Because as far as I understand that, this new merge allows for passive staking, which will allow users to hold coins in a cryptocurrency wallet and not have to do anything. They just support network operations in return for just holding coins. Is that how the new Ethereum staking model works? Pretty much all you need to do is have them in a certain family of wallets, so to speak. I don't want to overcomplicate it because it does get quite technical. And you would have to delegate the coins. You'd have to delegate and say that you're delegating them to stake them in the network. That's it. And you will be earning 10 to 15%. The forecast rate is 10 to 15%. And it will require you to maybe do one or two clicks of your mouse and maybe to understand something. But again, if you're talking about an institution and the institution is investing $100 million, $1 billion, $500 million into Ethereum, I think that they will spend enough time to know how to delegate it and to start earning the yield in it. And so again, I say, this is the thing that no one's talking about, is that you have an ESG friendly asset that is deflationary and that is paying you 10 to 15% to hold it. On the other hand, you have the US dollar, which is an inflationary asset. Now, you can tell me what you believe the inflation numbers are. I believe they're probably around 20%, but the government's reporting 7.5%. Let's meet halfway and say that they're 12%. On the other hand, I'm with you on the 30%, but yeah.
Exactly. I mean, you drink coffee, you're in New York, you know what how the prices have skyrocketed. Now, let's just wait for the effect of the Russia-Ukraine war and these high commodity prices. We're already seeing gas prices explode in the United States. And gas is just one thing. Corn, wheat. There is going to be rampant inflation. So you're going to have, your options are to hold this thing called the US dollar and to invest it at 0% interest rate or 0.25% interest rate. Or you can hold Ethereum and stake it and get, which is a deflationary asset. By the way, the usage is growing on the network. And so the adoption is growing, more people want it, and we are destroying more than we are creating every day. So we're destroying supply. And by the way, while you're holding it, you're getting 10 to 15% for holding it. It's a no-brainer.
Okay, but you're positioning it as holding Ethereum versus US dollar. By the way, though, that watch the burn chart sounds like a class at my gym, watch the burn. But let's talk about Ethereum versus Bitcoin, because it sounds like you're making a very solid case for Ethereum here. So do you see the so-called flippening happening, which is that Ethereum's market cap overtakes that of Bitcoin, given all of these very strong fundamentals that you're pointing out now?
Well, I think the flippening is a strong, I think you're running a little bit too far ahead. So I think maybe in a couple of years, that is a discussion for it to be happening. But let's look at what's happening right now. So if you look at the chart again, you can see that the ETH BTC chart, which is the Ethereum versus Bitcoin chart, has broken a key trend line, has retested the trend line, and is now on the way up. So you can see that. But more interestingly is if we zoom out a little bit, and I'm going to take you to the monthly chart. Let me just show you the monthly chart. This is the monthly chart, the exact same monthly chart. And you can see that for a long time, ETH was devaluing against Bitcoin until about January 2020. And since January 2020, actually the trend is completely reversed. And we're seeing ETH strengthen towards Bitcoin. Now, flippening, non-flippening, I think that's a little bit ambitious. But for now, if you ask me, hold on a second, you've got a certain amount of money and you got a gun to your head and you can only invest in one, Bitcoin or ETH, which one's going to go up more? My money's on ETH.
Your money is on ETH. If I give you $1,000 now, you're either putting it in Bitcoin or ETH. You're going for ETH over what time period?
Obviously, every investor should have a diversified portfolio. But if you put a gun to my head and you say, look, there's $1,000 and we're playing Squid Games and I've got to pick which one is going to go up. And otherwise, a player run gets eliminated. Well, I'm going for Ethereum.
In what time frame, though? How long do you keep this in play for?
I've kept it in play since about 2020, and I intend to keep it in play for the next couple of years. I'm much more weighted towards Ethereum than I am towards Bitcoin. One of the biggest reasons not to be in Ethereum was the risk of this merge. Because again, it's like flying. It's like me saying to you, Michelle, we're on an airplane, but on this flight, they're going to replace the engines on this airplane. They've never done this before, ever. It's a huge risk. And now it's working on a testnet.
On the testnet, but can we be that confident that this does work seamlessly come June? Because tests are one thing. In operations, what happens if this does get launched and there are hiccups along the way? What does that mean for this whole thesis then?
So I've been to many Ethereum developer summits. They call them developer conferences, ETH DevCons. I've been to multiple ETH DevCons. And I can tell you that the smartest people in the world today are working on Ethereum. And I can tell you that the smartest VCs are throwing money at these developers who are building amazing things in and on Ethereum. And I trust that the smartest people in the world, the collective brain power of the Ethereum developer base will A, pull this off successfully, but B, if they don't pull it off successfully, they'll pull the plug before the merge happens. They'll fix it up again and they'll try. Remember that Ethereum is notorious for missing deadlines. So they're notorious for giving bad timelines. But that's not a bad thing. Because remember that what they're doing, no one else has done before. And so, it's like if we've never done something before, we don't know how long it's going to take. Everything is speculation. And I think that they have the approach of there's no hard and fast deadlines. If we don't believe that it's going to work, we put it out, we do more research, we write more papers, and then we do more test nets. And eventually when it works, it does work. So I think that if you're asking me, I think that risk is not gone yet, but that risk is significantly reduced.
Which brings me to my next question. Say this happens successfully in June, maybe even July. What does that mean for Ethereum price ending 2022?
So it means a lot. It means that right now, Bitcoin drives all the prices. If Bitcoin goes up, the market goes up. If Bitcoin goes down, the market goes down. I think at some point, there's going to be a decoupling. And the market, at some point, we've been waiting for it for many years, but at some point, there's going to be a point where they say, okay, look, Bitcoin, you're a store of value. You're not really a technology. You're a technology as a store of value, but you're not a tech play, a growth stock play. But the rest of the cryptocurrencies out there are actually growth stock venture capital plays. And at some point, we've got to get that little split. I think that if ETH pulls this off correctly, money starts to flow into Ethereum and money starts to flow into the other altcoins. And that could spark Ethereum and altcoin bull run. However, if all the markets go risk off because of the Russia-Ukraine or anything to do with that, then everything resets. If everything goes according to plan and we get this Ethereum 2.0 successful merge, then I think that opens up the eyes of the world to alternative coins. And it's not only about Bitcoin anymore. It now becomes about, wow, there's this thing called Ethereum, and this thing called Ethereum is now safe. And we've spoken about the Ethereum case. And then investors, what do investors do? Well, they start looking down and saying, well, what is the next Ethereum? Remember when people started to buy Ethereum, it was because they thought they missed Bitcoin. And if you asked the average investor 3 years ago what Ethereum was, it's the other Bitcoin. It's the other cryptocurrency. No one could tell it was a smart contract platform that was being adopted for decentralized. No, it was just, we're looking for the next Bitcoin. It's the next Bitcoin. And the same thing is going to happen with investors. They're going to say, okay, we missed Bitcoin, we missed Ethereum. What's the next Bitcoin Ethereum? And they're going to start working their way down the altcoins, trying to speculate in that. And that's what's going to spark the alt season.
So what is, in Ron's opinion, the next altcoin that could benefit if all of this works out well?
You're such a degen. You're such a degen. you are a gambler degen. You're perfect for crypto. You should run a crypto show. I think it's about a series of narratives. So I don't think it's going to be one. I think it's going to be around a series of narratives. The overarching concept of all these narratives is we want things that are adopted. We don't want things that are not being adopted. And so there are multiple parts of this technology that are actually being adopted today. The first one is decentralized finance. And we know today that there's about $700 billion locked up in decentralized finance. And so I think investors may look for coins in the decentralized finance space, whether they are the decentralized exchanges or whether they decentralize money like Terra Luna, which we spoke about earlier. I think that Terra Luna is an amazing, I think it's probably one of the most exciting concepts. And today, when you look at it, it's got a $30 billion market cap. It's probably relatively cheap if this experiment works. That's the first thing. I think the other narrative is, even after Ethereum migrates to this ETH 2.0, we still need a lot of blockchain power, smart contract blockchain power. And so I think another narrative is people buying the smart contract blockchains, which is why Grayscale launched this new fund today, because they know that there's institutional demand for these smart contract blockchains. Things like Solana, things like Avalanche, maybe Cardano as well. So those are the other ones. The other narrative, which I think is really interesting, is NFTs. And we saw a coin launched the other day called ApeCoin, which was a coin launched by, well, not launched by, but indirectly by the founders of the Bored Ape Yacht Club and other big NFT players. And I think that ApeCoin, if successful, could be a great narrative. Full disclosure, I'm not buying it now. I'm short now, to be honest. And I'm short now because there's just been too much hype. But there's going to come a point where the hype dies down, the coin finds its price, and it's going to be a good time to buy. Right now, it's trading at about $11. I've got a target price for it between $5 and $7. If it gets to between $5 and $7, that could be great, because that could be the new world, the next generation Disney. And if I'm not mistaken, Disney has a market cap of over $200 billion. So, these are the narratives that are working. There's one other narrative, which is, it's quite controversial, but like it or not, I think it's going to get adopted. And that is privacy. So every blockchain transaction is transparent. And that's great for transparency, but it also makes the blockchain unusable. I'll give you an example. I don't know if you know this, but if you pay for your coffee using your Ethereum wallet, the coffee barista knows every single transaction you've ever made and how much money is in your wallet just by looking at your address. Okay. That's not cool. That's not cool. Now, if you're a company and if you were a supermarket and you were paying for supplies from an Apple manufacturer or whatever they buy, and you were paying using your blockchain wallet, then everybody in the world could see how much you're paying your supplier, where your supplier is, who the supplier is, et cetera, et cetera. That's crazy. And so there's a whole narrative around privacy on the blockchain. And there are a couple of tokens. There's a token called Secret Network. There's another token called Oasis Labs. There's a token called Tornado Cash. These are all privacy narratives. So I think that it's about picking your narratives The last one that, if you want to degen, let's degen. The last one that we should probably talk about is Arweave. Now, Arweave is one of my favorite tokens, and full disclosure, I'm an early investor and I've been invested since 2017. But Arweave have this amazing concept. They are a blockchain and they store data forever. You pay once and your data is stored in an immutable way forever. So it's not like Amazon Web Services or Microsoft or Alibaba, where you pay per meg per month or per gig per month or whatever. You pay once and it's stored forever. Okay, it's a completely new concept. We can't fathom it because we've never ever paid once and store things forever. But where is this being used? Well, for one, if you buy an NFT, you want to store that NFT forever. You want to make sure that if you're paying hundreds of millions of dollars or tens of millions of dollars for an NFT, that NFT is guaranteed to live forever. So people are indexing their NFTs to Arweave. But also now in Russia and Ukraine and in Hong Kong, what we saw is that when governments are trying to censor things, if you upload these things and store them on Arweave, they're there forever. And so there's no more erasing of history, so to speak. And so that to me is one of the most promising narratives in the whole world, one of the best use cases in the whole world. And it's a token that doesn't have very much hype. I think today it's got a $2 billion fully diluted valuation. I could be wrong. I haven't checked the price today. But to me, that is probably the most undervalued token on the market today. The most undervalued, relatively safe token on the market on a risk-adjusted reward basis. That's my best bet.
On a risk-adjusted reward basis, Arweave is your top altcoin of choice at the moment.
That's it, yeah.
Arweave. Okay, well, Ron, you've broken down those narratives. Terra, ApeCoin, some of the other altcoins that are in that Grayscale smart contract platform. But Arweave is your top pick. So as a risk reward, yes, risk adjusted, yes.
Risk adjusted, yeah.
For less risky assets, you said $1,000 you're going into Ethereum.
Ethereum. Definitely Ethereum. Ethereum, I think we're about to see a little Ethereum explosion. I guess let's get me back on here in a while and let's see if it played out. Yeah, let's see if it played out. I hope it does.
And from the ones that are in the Grayscale fund, Cardano, Solana, Avalanche, Polkadot, Polygon, Algorand, and Stella, what would you pick? Considering that they seem to have an era of safety if they're in this Grayscale fund.
I'm a big Solana fan. Solana is an incredible piece of technology. It's very fast. It's very cheap. It's got good people behind it. Sam Bankman-Fried is one of the major investors in it. Multicoin Capital, which is one of the biggest and smartest funds in the space, is one of the big drivers behind it. The founders and the technology is absolutely amazing. So for me, probably Solana. I think third after that is maybe Avalanche. Avalanche is another one. And then, Cardano. On the one hand, we've been waiting for Cardano to launch and to work for a long time. And Cardano has been, for crypto people, it's been quite disappointing because it hasn't taken off as quickly as the others. But they've adopted a much more scientific approach, more research papers, more research, not so much, don't fly the plane and change the engines while you're flying, but rather do the research and make sure that you get the right engines in there. So it's a long shot, but maybe Cardano. But if you put the gun to my head and you said, let's play Squid Games, I would pick Solana.
Solana from the ones in the Grayscale smart contract that we've just gone through. Gun to your head, Ethereum, then gun to your head, Bitcoin, then gun to your head, Solana.
And then Arweave.
Okay, well, hopefully there will not be a gun to your head, Ron. But we do enjoy going through your head and digging deep. And thank you for tremendous insight and tremendous analysis. Great to have you back on the show. And we know why they call you Crypto Man Rand. So great to have you back with us on Kitco.
Thank you. So good to see you, Michelle.
All right. Cheers.